ఒక్క నిమిషం. Okay, guys. Finally, we are coming to the revision classes for financial accounting. So, I am eagerly waiting for this, not you, because it is a biggest opportunity. Once again, I am meeting to you. So, there are two are waiting. So, Jyoti, hello, hi. Prashant. Below description ఉందని చెప్తాను. Hi guys, sorry for the inconvenience. Sir, the main target for the financial accounting revision classes is, these are the not revision classes. I have already told you in the YouTube. So these are the EVO classes. So this is like a EVO classes. The main target we are going to get if you attend these classes means 80 plus marks. So definitely 80 plus marks. I am not joking. This is definite 80 plus marks. So I will focus main on basics. Why, sir? I will told you. So no doubt, I will show the previous papers, all the previous papers. If you focus mainly on the basics, then only you will get the 80 plus. So otherwise, straight away you will get 35. No doubt, Amma. I will say the strategies how to get the 80 plus also. So I will discuss each and every concept. I am not going to leave partnership also. I will discuss each and every point. So first I will discuss the topic, then I will discuss the concept. Sorry, problems. Vaira Udbo. Sir, for the student's sake, I am going to leave my material soft copy in the YouTube itself. You will get the material soft copy below the video. So this is a gift for you. So if you listen these classes, you will get the 80 plus. First of all, why I am going to discuss about the basics means I will show the previous attempt paper. Wait a second now. If you see the second question of the previous attempt 2A, you need to check here AS10 we need to learn, but for writing 2B you need to definitely learn about the basics of subsidiary books. Without knowing an idea of subsidiary books, you cannot write this question. So here how many marks, Amma? 7 marks. So next, not only this thing, if you want to write the 14 marks of single entry, you need to definitely know about the types of accounts. Not only the single entry, for NPU also you need to know about the types of accounts. So there 14 marks plus 7 marks. Total how much, Amma? 21 plus we are going to get 6 MCQs from the basics. So 6 into 2 how much, Amma? 12. So 12 plus 21 means 33 marks nearly you will get from the basics only with the help of types of accounts. So I will discuss my style of accounts to you. I will introduce my style. So firstly I will start with the modern approach. So you know already we are having the two types of approaches, three types of approaches: traditional approach, modern approach, and accounting equation approach. So in this already we know what is the meaning of traditional approach. So what is the meaning of traditional approach, Amma? We know the golden rules of accounting. So what is the golden rules of accounting? Personal account, real account, nominal account. That one is called as a traditional approach. But in my classes, I will follow which approach, Ma? Modern approach. So what is the meaning of this modern approach, sir? I will learn you. So easily we can learn, no problem. Just take the T shape. In the T shape, left hand side is called as debit record and right hand side is called as credit record. I think you know the dealer spelling. So DEALER. This is a shortcut, amma. So D for drawings, E for expenses, A for assets, L for liabilities, E for equity or capital, R for revenue or income. The drawings, expenses and assets which are presented on which side, amma? Debit side. For this reason, these drawings and expenses and assets will have which balance? Debit balance. And liability, capital and incomes are having which balance, amma? Credit balance. I think, do you know about the meaning of drawings? What is the meaning of drawings, amma? If the owner taken away for the personal use, he can take away what, ma? Sir, no need to write anything. I will send the soft copy. You can take from the below link, below the description box. So not only this one, I will share my material, full material to you. Okay na? So please just listen and participate the classes. That's all. So drawings means, what is the meaning of drawings, amma? The owner taken away the goods for his personal use. Not only the goods, he can take away the cash also. What is the meaning of expense? Normal general expenses. Assets means, you know, liabilities. Equity means, in companies we are going to call it as equity. Generally what we are going to call it as capital. So revenue means nothing but income. So what is the meaning of debit balance, sir? First we can learn about the debit balance, and then we can learn about the credit balance, and then we can see the rules. So if the debit balance means increases, means what we need to do, debit. If the debit balance decreases, means what we need to do, credit. In the same way, if the credit balance increases, we need to do, sorry guys, just a second. We need to do credit and we need to do debit. So what is the main principle here? If the debit balance increases, we need to do the debit. If the debit balance decreases, we need to do the credit. Opposite, amma. In the same way, if the credit balance increases, what we need to do, amma? Credit. If the credit balance decreases, what we need to do? Debit. Why, sir? These are the rules we need to learn. So these rules we should not question to the basics. Are you getting the point? Sir, what is the meaning of debit balance, sir? Debit balance means nothing but, if I take an account, particular account, debit side amounts to 10,000 and credit side amounts to how much, amma? 8,000. So what is the difference are here? 2,000. Which side is more? Debit side is more. If in a particular account the debit side is more, it is called as a which balance, amma? Debit balance. So here the 2,000 means this particular account is showing which balance? Debit balance. For that reason, what is the closing balance we will get? By balance carried on. So what is the meaning of debit balance, sir? If in any account debit side is more than the credit side, it is called as a debit balance. So what is the meaning of credit balance, sir? I am taking the same example. In the credit side, how much, amma? 10,000, and the debit side is how much? 8,000. Which side is more? Credit side is more. For that reason, this account is showing which balance? Credit balance. And the closing balance we are going to get on which side, amma? Debit side. So what are the first two meanings, amma? What is the meaning of debit balance? Debit side is more than the credit side. What is the meaning of credit balance, amma? If the credit side is more than the debit side. So if the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. In the same way, credit balance increases, credit balance decreases, debit. So when the expenses will increase, when the assets will increase, I will show you, no problem. When the liabilities will increase and when the incomes will increase. As per sometime, you can imagine always expenses are increases, always incomes are increases. Drawings is nothing but asset and capital is nothing but liability. When the asset will increases, amma? When the asset will increases. If it is comes in, it is increases. If it is goes out, it is decreases. When the liability is increases. Freshly we have taken a loan from the bank. At that point of time, the liability will increases. For example, we have made the credit purchases. At that point of time also liability will be increases. Credit purchases means. For example, if you made the credit sales, asset will be increases. What is the asset at that point of time? Debtor. Okay, na? I will explain you, no problem, slowly. So as of now, I have discussed what are the points. Debit balance means debit side is more. Credit balance means credit side is more. So next, then after, we have to see where the opening balance we need to record. Opening balances and closing balance. First of all, what is the meaning of opening balance, amma? Balance brought down. What is the meaning of closing balance? Balance carried down. For the debit balance, opening balance will be on the debit side. For the debit balance, closing balance will be on the credit side. So opening balance means what we need to do, ma? Balance brought down or carried down? Opening balance means balance brought down. So debit side means what we need to write in the account 2. For that reason, 2 balance brought down is the opening balance of which one? Debit balance. And by balance carried on is the closing balance of which one, amma? Debit balance. So for the debit balance, opening balance will be on the which side? Debit side. For the debit balance, closing balance will be on the which side? Credit side. What is the meaning of opening balance? Brought down. What is the meaning of closing balance? Carried on. So for the debit balance, opening balance means 2 balance brought down. Closing balance means by balance carried on. So in the same way, for the credit balance, opening balance will be on the which side? Credit side. So on the credit balance, closing balance will be on the which side, amma? Debit side. So credit side what we need to put? By, and debit side what we need to put? To. So by balance brought down is the opening balance for the credit balance, and 2 balance carried on is the closing balance for the credit balance. These are the basic rules about the modern approach. So what is the shortcut of the modern approach, amma? Dealer, D for drawings, E for expenses, A for assets, L for liabilities, R for revenue, and next one is called as what, ma? E for equity or capital, R for revenue or incomes. So if these are the 3 items are having the debit balance, these are the 3 items having the credit balance. If the debit increases debit, if the credit increases credit. So these are the basic rules we have to remember while learning the types of accounts. The first I am going to discuss which account means debtor account, amma. Just give me a second. See this one, I have taken this example. Imagine this is the business and he is a debtor. When he will become a debtor for the business, always, I think you know this small major point. We have to think from whose point of view, ma? Business point of view, as per its entity concept. So what is the concept, amma? As per business entity concept, we have to think from whose point of view? Business point of view. If you made the credit sales, the person will become, this person is called as a debtor. So debtor has to give money to us, we need to pay to the debtor. Debtor has to give money to us. So for that reason, debtor is an asset or liability? Asset. Now the asset balance increases or decreases, amma? Increases. Previously the debtor value is equal to 0. Now the debtor value is equal to how much, amma? 10 lakhs. So here for this reason, the debtor value increases or decreases, amma? Increases. Okay, now. Next, what he can make, ma? He can make the sales returns. He can make the sales returns. Due to the sales returns, normally how much amount he need to pay? 10 lakhs. How much amount he is going to give the sales returns, amma? 2 lakhs. Now, net amount is how much we need to receive from the debtor? 8 lakhs. So here the value increases or decreases? Decreases. Whose value is decreases, amma? Debtor value is decreases. And next, he paid the amount to us. Whatever the amount he paid, amma, 7,50,000. The 7,50,000 after making the repayment, how much is the balance? So first 10 lakhs minus 2 lakhs, how much, amma? 8 lakhs. 8 lakhs minus 7,50,000, how much? 50,000. That means the balance again decreases or increases? Decreases. Okay, now next, discount allowed. What is the meaning of discount allowed? He no need to pay. What is the remaining balance, amma? 50,000. What we have said, amma? So no need to pay, amma. So for that reason, the debtor value is equal to how much, amma? 0 in our account. So one by one, the debtor value is decreases. Only for the first time debtor value will be increases. At which point of time debtor value will be increases? Only at the time of credit sales. And all the remaining situation, debtor value increases or decreases, amma? Decreases. What are the debtor value decreases situations? Sales returns, amount received from the debtor, discount allowed. And there is another point called as bad debts. Okay, now if the bad debts incur means debtor will pay, na, will not pay, na, debtor will not pay, but we need to reduce the balance. What we need to reduce, amma? Balance available in our books. Which balance we need to reduce? Debtor balance we need to reduce. Now with the help of this situation, we are going to learn which account, amma? Debtor account. So first try to get the entries. Sir, credit sales, what are the outcomes, amma? Credit sales of goods to the debtor, how much? 10,000 rupees. What are the two outcomes? Debtor and the sales. So debtor means asset or liability amma? Asset. Now only that debtor value increases or decreases? Increases. Sir, asset means which balance? Debit balance. If the debit balance increases, what we need to do amma? Debit. Sales means income. Income having which balance? Credit balance. We know all previously only I have told you, always incomes are increases, always expenses are increases. If the income increases, what we need to do amma? Credit. Okay na? So what is the entry, sir? Debtor account debited to sales. So like that we need to apply the modern approach. If the asset increases, debit. If the liability increases, credit. If the expenses increases, debit. If the income increases, credit. So like that we need to pass all the entries. I am straight away discussing which account amma? Debtor account. So see, this one is a debtor account. Sir, debtor means asset or liability amma? Asset. Having which balance? Debit balance. Sir, what is the meaning of debit balance amma? Anything increases, we need to record on which side? Debit side. If the debtor value increases, what we need to write amma? We need to record on the debit side. If the debtor value decreases, we need to record on the credit side. Okay na? Debtor value increases, debit. If the debtor value decreases, credit. Why, sir? Because it is showing which balance? Debit balance. If the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. Already we have seen for the debit balance, opening balance will be on the which side amma? Debit side. So to balance brought down. For the debit balance, closing balance will be on the which side? Credit side. By balance carried on. Guys, we know already. So debtor means an asset having which balance amma? Debit balance. If the debit balance increases, what we need to do? Debit. If the debit balance decreases, what we need to do? Credit. So opening balance for the debit balance will be on the which side? Debit side. And closing balance of the debit balance will be on the which side? Credit side. To balance brought down, by balance carried on. In which situation debtor value increases amma? One situation. Increases means which side we need to record? Debit side. So for that reason what we have recorded amma? To sales. For that reason what we have recorded? To sales. So next one. If the debit balance decreases, which side we need to record? Credit side. In which situations the debtor value will be decreases amma? First one is called as bad debts. I have told you, because of bad debts debtor value will be decreases. And next one, sales returns. And next one, what is the meaning of cash or bank ma? Cash or bank means collection from debtors. And next one, buy bills receivable. Sir, what is the concept of this one? Dishonor of a bill. And this one I will explain now, no problem. Except this thing, remaining all the things, I think you got the point. For the debit balance, opening balance will be on which side? Debit side, and closing balance on the credit side. Now we are going to discuss about the bills receivable concept. I think, do you know the meaning of bills receivable? Sir, imagine this is the business. First we have made the credit sales. First we have made the credit sale. Two person is called as what ma? Debtor. Who is this person? Keshva, our favorite friend Keshva. We have sold the goods. Okay na? Yeah, ignore the amounts. So, but we are not having the trust on the Keshva. Why, sir? Always he will do pujas. For that reason what ma? The amount will be gone. For that reason what? We are having the trust on our friend. We are not having the trust. We are not having the trust. For that reason what we have done ma? We have drawn the bill. You are on the bill. What is the entry for the credit sales? First of all, debtor account debited to sales. We know debtor value increases, sale value also increases. Debtor means asset, debit balance increases debit, sales, income, credit balance increases credit. So, but here we are drawing the bill means, so in the place of debtor, we are bringing the bills receivable. In the place of debtor, what we are bringing ma? We are bringing the bills receivable. Sir, bills receivable asset or liability? Asset. The bills receivable having the asset balance increases or decreases amma? Increases. So previously we are not having any bills receivable. Now only we are having the bills receivable. For that reason bills receivable value increases or decreases? Increases. So asset, bills receivable asset or liability? Asset. Asset means which balance amma? Debit balance. If the debit balance increases, what we need to do? Debit. But in the place of debtor, we have brought into the bills receivable and debtor value we have decreased. So debtor means asset, value decreases means debit balance decreases means what we need to do amma? Credit. So what is the entry? Bills receivable account debited to debtor. For that reason, because of bills receivable, debtor value increases or decreases? Decreases. because of bills receivable, debtor value decreases. If the debtor value decreases means which side we need to record? Credit side by bills receivable. What is the entry for this one? Bills receivable account debited to debtor account. And there are two concepts, Amma. It may be a honor or it may be a dishonor. What is the meaning of honor? On the due date, if the debtor made the payment means it is called as a honor. On the due date, if the debtor not made the payment means it is called as a dishonor. Sir, made the payment means we are going to receive the cash and bills receivable value will be decreases. So what is the entry, Amma, here? Cash or bank account debited to bills receivable account. Sir, if this is a honor, no entry will be recorded in the books of debtor, in the account of debtor. Will be recorded or will not be recorded? Will not be recorded because there is no debtor in the debit and or credit. Sir, if it is a dishonor, the validity of the bill was completed. For that reason, we are reducing the bills receivable and we are increasing once again what, ma? Debtor value. Why we are increasing, ma? The validity of bill was completed. Before that, in the place of debtor, we have put the bills receivable. Now bills receivable is there or not there? Not there. Validity is there or not there, Amma? Not there. For that reason, again we are bringing back. What is the entry, Amma? Debtor account debited to bills receivable account. Okay. Because of dishonor of a bill, debtor value increases. Because of bill drawn, debtor value decreases. If the debtor value decreases, which side? Credit side. If the decreases, if the debtor value increases, which side, Amma? Debit side. By bills receivable is for dishonor. Sorry, to bills receivable is for dishonor. By bills receivable is for drawn. So ultimately, I am giving the conclusion. If you remember this account, the same account I will use in the NPO also. The same account I will use in the branch also. Okay, now, but I will make the changes according to that chapter. Okay, now, and this account is mainly useful for which chapter? Single entry. Sir, we are not discussing the basics. We are discussing the single entry only. But straight away, if I start the single entry, so these accounts, some of the people may know this account or may don't know this account. But unfortunately, these accounts this type of accounts we are using in so many chapters. Without knowing these basics, so we cannot do anything. For that reason, the first I am discussing my style. So you need to understand my style, then only the remaining classes will get understand. Otherwise, you will not get understand. Okay, na? So ultimately, when coming to the debtor account, in which situation debtor value increases, Amma? Two situations. In the case of credit sales, in the case of dishonor of a bill. And remaining all the situation debtor value increases or decreases, Amma? Decreases. And we know opening balance on which side? Debit side. Closing balance on which side, Amma? Credit side. Because this is an asset. The same rules will be applicable for any asset account also. For any asset account, opening balance will be on the which side, Amma? Debit side. Closing balance will be on the which side, Amma? Credit side. For any liability account, opening balance will be on the which side? Credit side, and closing balance will be on the which side? Debit side. For any expenditure account, for the expenditure account and the incomes accounts, there is no opening balance because the closing balance will transfer to which account, Amma? PN. All the nominal accounts will be transferred to the PN. For that reason, for the income and the expenses accounts, there is no opening and closing balance. Are you getting the point, Amma? So till now we have completed the discussion of debtor account. I think I have. Is there any doubts up to here, Amma? So I think I am going so much fast. I think so. Sir, because this is a revision, I want to go somewhat fast only. Okay, no problem. About creditor account, Amma. Which account we are going to discuss? Creditor. So once again, we have to think from whose point of view? Business point of view. Okay, na guys. So here we are purchasing the goods, we are selling the goods, Amma. We are purchasing the goods. Here purchase means income or expenses, expenses. Purchase means. So here this person will become a creditor. So this is a creditor means we have to pay, na? Creditor need to pay to us. We have to pay to the creditor. For that reason, we will pay in future and our future. For that reason, he is a debtor. Sorry, he is an asset or liability, Amma. He is a liability. So liability now only increases. So now only we made the liability. Previously creditor is there or not there? Not there. For that reason, at the time of credit purchase, the creditor value increases or decreases? Increases. Okay, now. Then we made the purchase returns. at that point of time creditor value increases or decreases amma? Decreases. Why? Previously how much amount we need to pay? 10 lakhs. Now we made the returns how much amma? 2 lakhs. How much amount need to pay to the creditor? Only 8 lakhs. So previously 10 lakhs, 2 lakhs already returned. So what is the normal balance now? 8 lakhs. So for that reason creditor value increases or decreases? Decreases. And next we can make the what ma? Cash. We paid the cash of rupees how much? 7,50,000. So because of this one also creditor value increases or decreases? Decreases. So starting what is the value amma? 10 lakhs, and then we have reduced it for 2 lakhs. What is the value of the creditor now? 8 lakhs. We made the 7.5 lakhs payment. What is the value now? 50,000. The creditor allowed the discount. That means we are received the discount. So for that reason of rupees 50,000 we are reducing, means what is the balance? Nil. So in which situation creditor value will be decreases? Purchase, returns, payment to creditor, and discount received. And there is another situation called as bills payable. So bills payable accepted situation also our creditor value will be decreases. In the case of bills payable dishonor, the creditor value will be increases. So I can conclude, I can say in two situations the creditor value will be increases. What are the two situations amma? Credit purchases, and next one dishonor of a bills payable. And what are the situation the creditor value will be decreases? Purchase returns, payment made to creditors, and next one is called as discount received and bills payable accepted. Okay. Sir, here we are discussing which account amma? Creditor account. Creditor means asset or liability? Liability. Sir, liability having which balance amma? Liability having the credit balance. So because liability having the which balance amma? Credit balance. Now if the credit balance increases, which side we need to record? Credit side. If the credit balance decreases, which side we need to record? Debit side. Increases means credit side, decreases means debit side. In what are the situations? Okay, I am saying no need to write ma. I will provide you the PDF. Okay na? So in the creditor account increases, in which situation the creditor account increases amma? Credit purchases and bills payable dishonor. And remaining situation the creditor account will be increases or decreases? Decreases. What are the remaining situations of decreasing in the creditor account? Purchase returns. What is next one? Cash or bank means what ma? Payment made to creditors, discount received, and bills payable accepted. As usual we know first we need to write the opening balance and closing balance. What is the opening balance of the of the credit balance ma? Credit side. By balance brought down, to balance carried on. Sir, one thing you need to remember, if you understand one account in my style, usually you can learn, we can prepare any type of account easily. Okay na guys? So you need to remember the opening balance for the debit balance on the debit side and closing balance on the credit side. For the credit balance, opening balance will be on the credit side, closing balance will be on the debit side. So now we have completed totally two accounts. What are the two accounts amma? Debtor account and creditor account. Is there any doubts up to here? So we can learn about the bills payable now. I will take the example, no problem. So imagine he is a creditor ma. He is a creditor and the business. We made the credit purchase. We made the credit purchase, but creditor is not having trust on us because we made something mistakes in future. I don't know. So for that reason he is drawing what ma? Bill. We have accepted it. He is drawn the bill. We have accepted. For our point of view, it is a bills payable. For the creditor point of view, it is a bills receivable. Okay, bills payable accepted means at that point of time, what is the credit purchase entry amma? Purchase account debited to creditor. When coming into the bills payable, okay, bills payable and the creditor are the outcomes. So what is the bills payable amma? Asset or liability? Liability. Having which balance amma? Credit balance. Sir, bills payable now only come into the picture. What is the meaning of bills payable? Asset or liability? Liability. Will have which balance? Credit balance. Increases or decreases amma? Increases. For that reason what we need to do? Credit. And the creditor having a which amma? Liability. So liability having the credit balance now decreases amma. So the creditor will decreases and bills payable will be increases. Both are assets or liabilities? Liabilities. So for that reason bills payable will be credited and creditor will be debited. So what is the entry amma? Creditor account debited to bills payable account. For that reason bills payable, for the purpose of bills payable, creditor value increases or decreases? Decreases. At the time of making the payment on bills payable value increases and cash comes in and goes out amma. Goes out. Bills payable value decreases means which side? Bills payable means asset or liability? Liability. Liability having which balance? Credit balance. If the credit balance decreases, debit. So bills payable will be debited and to cash or bank comes in, goes out, goes out. And if it is a dishonor means this entry opposite, dishonor means opposite to the accepted entry. What is the accepted entry, Bills pay, creditor account debited to bills payable account. What is the reverse entry? Bills payable account debited to creditor account. Okay, na guys. So for that reason, here the creditor value increases or decreases? Increases. Increases means which side? Credit side. Which side, amma? Credit side. Decreases means which side? Debit side. Because the creditor is a liability having the credit balance. So these are the two accounts. Now up to now we have completed the basic rules. What are the basic rules, amma? Modern approach we have seen. And then what is the meaning of debit balance? What is the meaning of credit balance? So in the as per the modern approach, assets will have which balance, amma? Debit balance. Expenses will have which balance, amma? Debit balance. Incomes, credit balance. Liabilities, credit balance. So only 4 items will be there, amma, in accounting. Wherever you can see, sir, accounting is the easiest concept. If you learn the basics, the paper is very easy. So I have previously showed the paper. Nearly 30 marks we are getting from the basics itself. So what are the 4 items? Assets, expenses, liabilities and incomes. So asset debit, expenses also debit balance, and liabilities having credit balance, incomes having the credit balance. If the debit balance increases, debit. If the debit balance decreases, credit. If the credit balance increases, credit. If the credit balance decreases, debit. So what is the meaning of debit balance? Debit side is more than the credit side. In a particular account, debit side is more than credit side. What is the meaning of credit balance? In a particular account, credit side is more debit side. So for the debit balance, opening balance will be available on which side? Debit side. Closing balance will be available on which side? Credit side. For the credit balance, opening balance on credit side, closing balance on debit side. So these are the basic rules we need to remember. And we have completed the debtor account and creditor account. Is there any doubts up to here? So anybody are asking questions, sir? Okay. Now we try to understand the capital account, amma. So what is the meaning of capital? You know, without the capital, business we can do now, we cannot do now. We cannot do the business. So the owner, the most powerful person is called as Pawan Kalyan, and the business. So we know owner is a different person and business is a different person as per the separate entity concept, business entity, separate legal entity concept. So here we should not think from the owner point of view. We have to think from the business point of view. Sir, owner first invested into the business. How much he has invested, amma? 1 crore. Sir, capital means asset or liability, first of all. It's a liability because we need to repay in future. At the time of winding up or any situation, we need to repay. For that reason, we are having the obligation to repay means it is called as asset or liability, amma? Liability. So, how much amount he has incurred, amma? He has given 1 crore. Okay, next one. From the business, owner can take the goods, cash or any other assets for his personal use. What is the meaning of this one? Drawings. If he can take away the goods, he can take away the cash. Okay, na? Okay, kind means he can use the business property as a rental purpose or any purpose. So this is called as what, ma? Drawings. Sir, here we need to understand about the capital account. Okay, either the capital is asset or liability. Liability having which balance, amma? Credit balance. If the credit balance anything increases means which side we need to do? Which side we need to record? Credit side. And decreases means which side, amma? Debit side. Sir, this is the most important ledger account when coming to the single entry because we are having the two methods of Two methods in the single entry. First one is called as capital comparison method and second one is called as financial statements method. Okay, now in that capital comparison method, we need to find out opening capital, closing capital. At that point of time, if you prepare this account, it is easy to find out either opening capital or closing capital. Sir, first of all, for the credit balance, opening balance will be on which side? For the credit balance, opening balance will be on which side, Amma? Credit side. So what we need to write? By balance brought down. For the credit balance, closing balance will be on which side? Debit side. To balance carry down. Okay, now these are the main points we need to learn. And next, in which situation the capital will be increases? At the time of capital introduced into the business. So for that reason, what we need to record, Amma? By cash or bank. Increases means which side? Credit side. By cash or bank. So now interest on capital. Interest on capital. Business need to pay to the owner or owner need to pay to the business? Business need to pay to the owner. So anything business need to pay to the owner means which side? Credit side. Anything owner need to pay to the business means which side, Amma? Debit side. So interest on capital we need to add back to the capital. Why, sir? Because we will pay in future this one also. Because of interest on capital also, the capital value increases or decreases? Increases. Next, because of drawings, the capital value increases or decreases, Amma? The capital value will be decreases, and because of interest on drawings also, the capital value will be decreases. Okay, now what are the situation the capital value will be increases? Additional capital and next one interest on capital. Because it is, for example, if you take the bank loan, on that bank loan we need to pay the interest. Bank loan will give the interest. We need to pay to the, so loan means liability. On the liability interest means it is an expense to us. We need to pay in future. For that reason the capital value increases. Here the drawings is an asset, Amma. Drawings is an asset. On the asset interest means that is an income to us. On the asset interest means it is an income to us. On the liability interest means it is an expenses to us. Okay, na? Because of interest on capital, capital value increases. Because of interest on drawings, capital value decreases. And here the balancing figure is called as what, ma? Either profit or loss. If the profit come into the picture means we need to pay to the owner. For that reason we need to record on which side? Credit side. If the loss getting to the picture means we need business. For that reason which side we are getting, Amma? Debit side. So these are the two missing figures. We may get either profit or either loss. Are you getting the point? So this profit is nothing but gross profit. This profit is nothing but gross profit. In the question sometimes they will give the further adjustments like depreciation, like rent payment, like this. So from this profit we need to adjust the other expenses, then we will get the net profit. Then we will get the net profit. All the discussions we can discuss in tomorrow's class. So now we are discussing only the ledger accounts. So correct only, Amma. Correct only. Okay, na guys. So what are the reasons the capital value increases, Amma? Additional capital, interest on capital. Increases means which side? Credit side, because it is a liability. What are the reason the capital value decreases? Drawings, interest on drawings, loss. Loss. Because of profit, capital value increases. Opening balance will be on the debit side, credit side, and closing balance will be on the which side, Amma? Debit side. So these are the points. So don't worry. So next we have completed debtor account, creditor account, and capital account. And next we are having the three more accounts are pending. What are the three more accounts are? Expenditure account, income account, and asset account. Okay, na? So first I will discuss the asset account and then I will discuss about the expenditure and income account. So here comes the asset account, Amma. So asset means which balance, Amma? Asset means debit balance. If the debit balance, debit side means increase or decrease, Amma? Increases. Credit side means decreases. Sir, asset debit balance means opening balance will be on which side? Debit side. To balance brought down. Closing balance will be on which side? Credit side. Buy balance carried on. Okay na guys. Next then after, if you see here, so because of purchase of asset value increases. Because of sale of asset value decreases. And because of depreciation, asset value decreases. And either we may get the profit on sale of asset, loss on sale of asset. Profit means which side, amma? Debit side. Loss means which side? Credit side. Okay na guys? Because in the P&L account, profit which side, amma? Credit side. For that reason, here the profit. Sir, here that in the capital account is different. In the capital account, it is a different. Okay now, there is a different way of thinking. Here is the different way of thinking. So what are the points? So because of purchase of asset value increases. For that reason, we are recording on which side, amma? Debit side. Because of sale of asset value decreases. For that reason, we are recording on which side? Credit side. Because of depreciation, asset value decreases. For that reason, we are recording on credit side. And next, profit on sale of asset and loss on sale of asset. Profit means P&L account credit side. Here debit side. Loss means P&L account debit side. Here credit side. Are you getting the point, ma? So the balancing figure, we may get either profit, opening balance or closing balance. Most of the times they will give the opening balance, closing balance. We need to find out what? Depreciation. There is a lot of difference between the provision for depreciation and depreciation. I will discuss this concept. What are the difference between provision for depreciation, all the things in AS 10. While discussing the AS 10, I will discuss the depreciation also. I will explain very clear at that point of time. As of now, only think about the depreciation, that's all. Okay na guys. So we have completed which accounts, amma? How many accounts we have completed? Debtor, creditor, capital, asset. So next, the most favorite accounts are called as expenses accounts and income account. Sir, these are the two accounts are most important accounts. Most of the people may don't know about the expenses accounts and incomes account. But when coming to the NPO point of view, those accounts are playing the key role. Which point of view, amma? NPO point of view. Without expenditure account and without income account, we cannot do the chapter only. So in order to find out the correct subscription amount, we need to prepare what, ma? Income account. Okay na guys. So I will explain you carefully. So before that, we need to understand some of the meanings. Sir, outstanding expenses. Outstanding expenses. What is the meaning of outstanding expenses? Means the expenses related to the current year. Expenses related to the current year, but have not paid during the current year. That means what, must still payable. Still payable. Expenses payable is nothing but outstanding expenses. Sir, whether this is a asset or liability? Liability. So remember, this is a liability. So what is the entry for this one, sir? Expenses we have paid. What is the normal expenses paid entry, amma? Expenses account debited to cash or bank. But we have paid, we have not paid. We have not paid. So for that reason, expenses related to current year, we should do what, ma? Debit. And outstanding expenses means what, ma? Why we are writing the outstanding expenses? If we are having only one person, means we can write expenses account debited to Mr. A. For example, if we take the salaries payable to your organization, if they are not paying to one employee, means they will not pay to all the employees also. For that reason, we cannot write all the persons' names here. For instead of group of people, we are substituting one personal account called as outstanding expenses. So outstanding expenses, they may ask you in the examination as MCQ. It is a representative personal account. It is a representative personal account. Okay, now we are in a payable situation. We will pay in the future. That means is a creditor or debtor? Creditor. For that reason, we have debited. Like that also you can think. So expenses account debited to outstanding expenses account. It is an entry. It is an entry. Here also, if you follow the modern approach, it will be very simple. If it is debit balance increases means debit, decreases means credit. So I am taking the example. So BCCI paid the salary to the Kohli. So 1 crore per month, amma. Per annum how much? 12 crores. So but in the current year we paid only how much? 8 crores. So what is the entry for this one? Expenses paid or payable? Paid. What is the entry? Salary account debited to cash account. So, but the 4 crores we have paid, we have not paid. Even though it is related to current year, but we have not paid. For that reason, it is called as salary payable or outstanding salary. So, what are the two outcomes, Amma? Salary and outstanding salary. Are expenses or outstanding expenses? So, expenses, debit balance, even though we have not paid, it is increases. Even though you have not paid, it is increases. So what we need to do, Amma? Debit. Outstanding expenses means asset or liability. Liability having which balance, Amma? Credit balance. So liability now only increases. Liability now only increases. Previously we are not having any outstanding salary. Now only we are having what, Ma? Outstanding salary. Increases means what we need to do? Credit. So what is the entry, Amma? Salary account debited to outstanding salary account. What is the amount? 4 crores. 8 crores is the payment amount. So now, prepaid expenses. Sir, what is the meaning of prepaid? Prepaid means we have paid in before time period occurs. For example, expenses related to next year, but we have paid during the current year. That particular expenses belongs to next year, but we have paid in the current year. For example, if you take this one, rent per annum is equal to 12 lakhs. Rent per annum is equal to how much? 12 lakhs. But in the current year, how much expenditure we have made? 14 lakhs. So 12 lakhs related to which year, Amma? Current year. And 2 lakhs related to which year? Next year. So 12 lakhs normal expenses. What is the normal expenditure entry? Expenditure account debited to cash or bank. So rent account debited to cash. We need to bifurcate the difference, Amma. So this 12 lakhs only related to current year. The 2 lakhs is not related to current year. If you write there also rent means that rent and this rent will be the same. But as per we know, as per accrual concept, what is the concept, Amma? We need to record only the current year expenses. Anything related to current year, whether paid or not paid, okay, now whether received or not received. As per this reason, even though we have paid before the due date also, we should do the bifurcation. For that reason, what we need to write? We should not write the expenses. We should write what, Ma? Prepaid expenses. We should write what, Ma? Prepaid expenses. If you write here also expenses means that particular expenses belongs to which year? Current year, like that will be there. But as per accrual concept, we should do the bifurcation. We should consider only the current year expenses even though we have paid or not paid. So what is the entry, Amma? Prepaid expenses account debited to asset. To cash or bank account. So prepaid expenses means asset or liability? Asset. So having which balance, Amma? Debit balance. Increases or decreases? Increases. Why, sir? Previously we are not having any prepaid expenses. Now only we are having the prepaid expenses. For that reason, increases means what we need to do? Debit. So what is the entry, Amma? Prepaid expenses account debited to cash or bank account. Sir, why are you saying? Without this, we cannot learn the expenditure account. Are you getting the point? So when coming to the asset account, we will see the regular transactions related to asset. When coming to the debtor, we will see the regularly. Creditor also regular. But when coming to the expenses account and income account, both are irregular, Amma. So most of the people may don't know. I will explain in easy manner. Okay, na guys? Now, income receivable. So what is the meaning of income receivable, sir? Income related to current year, but we have not received during the current year. That particular income related to which year, Amma? Current year only, but we are not received. For example, if you take business, what is the meaning of business, Amma? We have made the fixed deposit in which bank? HDFC bank. Okay, now we know how much we have made the fixed deposit. 1 crore fixed deposit life settle. Yes or no, Amma? If you take the 12% interest, how much we will get? 1 crore into 12%. 12 lakhs. Monthly 1 lakh. We can sit and we can eat easily. Okay, now so try. What is the target, Amma? Not only 1 crore. Try to put the bank balance of 10 crores. With the help of interest only, we can live. Yes. Yes. Okay. That is for a general knowledge purpose. Okay. I am taking the percentage is equal to how much, Amma? 10%. How much interest I am getting? 12 lakhs. Sorry, 10 lakhs. How much interest I am getting, Amma? 10 lakhs. Divide into the 4 quarters. So how many quarters will be there in a year? 4 quarters. Quarter means 3 months. How many months will be there? 12 months. 12 divided by 3. That is equal to how much, Amma? 4 quarters. Okay, now we know normally how the bank will give the interest means first quarter interest they will give in the second quarter. second quarter in third, third in four in next year. Okay, that means how many quarters interest we have received during the current year? 3 quarters interest. So 10 divided by 4 into 3, that is equal to how much, Amma? Okay, do that 10 divided by 4, how much you are getting? 2,50,000. We have received the 2,50,000 of first quarter in the second quarter, and second quarter in the third quarter, third in the fourth. But we have not received the fourth quarter interest in the current year. In which year we are going to receive the fourth quarter interest? In the next year. That means how much amount we have to receivable, Amma. So we have received only the 7,50,000. We have to receive how much? 2,50,000. What is the entry for the 7,50,000? Cash or bank account debited to interest received account. Cash or bank account debited to interest received account. But this interest we have received. If you received means cash or bank. We have not received for that reason. Interest receivable account debited to interest account. We need to show it as income, or we should not show now. We need to show it as income because it is related to current year, not related to current year. It is related to current year. For that reason, we need to show it as income. So what is the income here? Interest. If the income increases, what we need to do? Credit. But what is the meaning of 2,50,000, Amma? Interest receivable means asset or liability? Asset. So anything receivable means asset. Anything payable means it is a liability. Are you getting the point? So what is the entry, Amma, here? Bank account debited to interest received. Interest receivable account debited to interest account. So even though we have not received the income of current year, but we need to show this particular income during the current year itself. For that reason, when coming to the final accounts, we are going to add this interest. Yes or no, Amma? We're going to add this back, this interest given in the adjustment means. Are you getting the point? So next, income receivable account debited to income account is an entry. So next, the most favorite concept. So most of the people don't know about the income received in advance. They will think still it is an asset. It is not an asset, Amma. It is a liability. Okay, now why, sir, it is a liability? We have received the income, sir. We have received the income in the advance. It is an asset? No, it is not an asset, it is a liability. Sir, why, sir? Can you give an example? I will give the example, Amma. Income related to next year, but we have received during the current year. We should not disclose as income in the current year. As per which concept? Accrual concept. Sir, previously we have disclosed as income. Why, sir? It is receivable capacity. It is related to which year? Current year. For that reason, we have disclosed in the current year income. Okay, now. So education institute is there. Okay, now we have started one education institute of CMA like SHIKHARA. For the SHIKHARA we are coming to the competition. Okay, now. So how much we are going? Not like SHIKHARA, Amma. Okay. Some of the people they will collect the 3 lakhs. They will collect the 3 lakhs. Education fee for CMA. Total education fee how much, Amma? 3 lakhs. But I am making as division. For the foundation and CMA CAT how much, Amma? 1 lakh. For the inter 1 lakh. For the final 1 lakh. So fees not like that will be there. Just imagine 1 lakh for the foundation, 1 lakh for the inter, 1 lakh for the final. Imagine foundation is the first year. Imagine the foundation is the first year. And the second year is called as inter. Third year is called as final. But in which year, in the current year, how much amount I need to receive? Only 1 lakh. But I received how much? 3 lakhs. Current year income is how much, Amma? Only 1 lakh only. But I have received how much, Amma? We are in a which year? Foundation only. How much amount we have received totally? 3 lakhs. So what is the income belongs to the current year? Only 1 lakh. What is the meaning of this 2 lakhs? This 1 lakh plus this 1 lakh, how much, Amma? 2 lakhs. What is the meaning of this 2 lakhs? Income received in advance. We have received the income, but we have not provided the service. It is called as liability. Obligation to provide the service, it is called as a liability. Are you getting the point? For that reason, income received in advance is a liability. So liability increases or decreases? Increases. Previously, we are not having any income received in advance. So liability increases means what we need to do? Credit. We have received the cash now. So what is the entry, Amma? For the current year, income received how much, Amma? Cash or bank account debited to fee received. For the next upcoming years, income received in advance. What is the entry, Amma? Cash or bank account debited to income fee received in advance or income received in advance. So what is the ultimate entry, Amma? Cash or bank account debited to income received in advance. Why you have credited? Because it is a liability, increases, credit balance credited. Cash, asset, debit balance comes in, increases, debit. Are you getting the point? So now we need to discuss about the accounts. Sir, here the normal transactions in the expenditure account is called as expenses paid, outstanding expenses, prepaid. These are the normal transactions like asset. If you take the asset account, what are the normal transactions related to asset? Purchase of asset, sale of asset, depreciation, like that will be there now. In the same way, these three also called as what? Normal transactions only. What are all the normal transactions here? Expenses paid, outstanding expenses, prepaid expenses. These are the three normal transactions. So here you need to remember expenses means nominal account. All the nominal accounts will be transferred to which account? P&L account. For that reason, there is no opening balance and closing balance. The closing balance will be transferred to which account? P&L account. Will be transferred to which account? P&L. Trading or P&L. Sir, here, what is the entry for the expenses paid? Expenses account debited to cash account. So if you, which account we are going to discuss? Expenses only. If it is expenses, to cash or bank, by cash or bank? To cash or bank. I am discussing about the expenses paid, to cash or bank. When coming to the outstanding expenses, it is asset or liability? Liability. Sir, they will give the two amounts. Amount related to previous year, amount related to current year. Previous year means nothing but opening balance. Previous year means nothing but what? Opening balance. Current year means nothing but closing balance. Sir, for the liability, opening balance will be on the which side? Credit side. What is the name of that opening balance? By balance brought down. By balance brought down. By balance means which side we need to record? Credit side. By balance brought down. Okay, now. So, to balance carried on means which side we need to record? Debit side. So, for that reason, first to cash or bank. What is the meaning of to cash or bank? Expenses paid. Expenses paid. I have told you already, there is no opening balance. There is no opening balance. So for the expenses paid, what is the entry? Expenses account debited to cash account. This is the expenses account. Which side we need to record? Debit side. Expenses account debited to cash means expenses debited or credited? Debited. For that reason, in the particular account, which side we need to record? Debit side. Sir, here the expenses means which balance? Debit balance. For the debit balance, increases means which side? Decreases means credit side. So I have already told you, by balance brought down. Which side we need to record? Credit side. By balance brought down. What is the meaning of this by balance brought down? Previous year outstanding. What is the meaning of to balance carried on? Current year outstanding. If you take the prepaid, prepaid means what? Asset. Prepaid means what? Asset. They will give the 2 years information. Previous year information, current year information. Previous year means opening balance, current year means closing balance. So opening balance for the asset will be on which side? Debit side. To balance brought down, by balance carried on. The to balance brought down means which side? Debit side. To balance brought down, by balance carried on. The balancing figure will be available, should be transferred to which account? P&L account. This is called as closing balance. This is called as what? Closing. So generally this amount they will give. Okay, now if nothing, sometimes they will give these amounts, or sometimes they may not give these amounts. Generally, what is the missing figure in expenses account is called as P&L account. How much amount we need to transfer to the P&L account? That is only the missing figure when coming to the expenditure point of view. Sir, same if you link this account to the NPO means receipts and payments account is nothing but income and expenditure account. Okay, now cash and bank account is nothing but receipts and payments account. So sometimes they will ask, they will give the income and expenditure account, and they will ask how much amount we need to record in the receipts and payments account. At that point of time, what is the missing figure? Cash and bank is the missing figure. Sometimes they will give the receipts and payments account, and we need to identify how much amount we need to transfer to the income and expenditure account. At that point of time, what is the balancing figure? P&L account. Are you getting the point or not, Sir, simple, sir. What are the normal transactions when coming to the expenses point of view? Expenses paid, outstanding expenses, prepaid expenses. When coming to the expenses paid, only current year expenses they will give. So what is the entry for the current year expenses? Expenses account debited to cash or bank. So to cash or bank. When coming to the outstanding, it is a liability. For outstanding previous year amount, they will give current year amount. Previous year means opening balance, current year means closing. For liability, opening balance will be on the which side? Credit side. So by balance brought down, to balance carried on. So by balance means credit side, to balance means credit. Further like that we are going to start. Sir, if you want to know the logic, I will also explain the logic. Okay na? If you see this one, ma. Sir, this is the remembering purpose. This account is for which purpose, amma? Remembering. All the times knowing the logic means we may forget in the examination. Even though I will explain, no problem. Sir, outstanding for the current year. Outstanding for the current year means what is the meaning of that one? That the particular expenditure is outstanding in the current year. Okay, that means that the expenditure belongs to which year? Current year. Expenditure belongs to which year, amma? Current year. Okay, na? I will say one thing. So this outstanding of the current year belongs to which year, amma? Belongs to, I am saying, belongs to current year. Or sir, outstanding for the previous year belongs to which year? Previous year. Belongs to which year, sir? Previous. Sir, I am using the word belongs to. I am not using the word previous year means previous year, current year means current year. Are you getting the point, amma? So I have not simply recorded previous year means previous year, current year means current year. I am not recording like that. Whether this amount is belongs to which year I am asking. This amount, sir, outstanding for the previous year means this is outstanding for the previous year. That means belongs to which year? Previous year. Outstanding for the current year means this is outstanding for the current year. That means belongs to which year? Belongs to also current year itself. And next, the very important point. Sir, prepaid expenses paid in the previous year means that particular expenses related to which year? Current year. Belongs to current year. This one is belongs to current year. Sir, prepaid expenses paid in the current year means that particular expenses related to which year? Next year. Related to which year, amma? Next year. Are you getting the point? Because we already know all the points. One time I am revising that all. Sir, anything related to current year means it is increases. Anything related to current year means it is increases. So current year, what are the two items, amma? Outstanding expenses, closing, opening balance or closing balance, amma? Closing balance. Nothing but current year outstanding related to current year and previous year prepaid related to current year. These two things we have recorded on the debit side. If you observe, see once. Which side we have recorded, amma? Debit side, because that one related to which year? Current year. So current year outstanding related to current year. For that reason we have recorded the here. Related to which year, amma? This is also related to current year and this is also related to which year, amma? Current year. But when coming to the previous year outstanding related to which year? Previous year. And when coming to the current year prepaid related to which year? Next year. So next year means decrease, current year means increase. Increase means debit, decrease means credit. Closing balance will be transferred to P&L account. Are you getting the point? This is as per concept. Without concept also we can record the entries or we cannot record. We can record. Simply outstanding means what, ma? Liability. Previous year amount is called as opening balance. Current year amount is called as closing balance. Opening balance for the credit balance is called as by balance brought down. For that reason we are recording on which side? By means credit side. So like that also you can remember, or concept wise also you can remember. Okay na? Once again I am asking, if it is a current year means debit side. If it is a previous year or next year means it is a credit side. The expenses paid will be there to cash or bank and the closing balance will be transferred to the P&L account. So what are the items belongs to current year, amma? Current year outstanding belongs to current year and prepaid related to the previous year belongs to current year. Previous year outstanding belongs to previous year. Current year prepaid belongs to next year. So next year or previous year means reduce. Current year means add. So next, the same logic will be applicable for the income also. So for the income, what are the three normal regular transactions? Income received, income receivable, income received in advance. What are the general transactions for the expenses? Expenses paid, outstanding expenses, prepaid expenses. What are the general transactions for the income? Income received, income receivable, income received in advance. Okay, now these are the general transactions like asset, pay as purchase of asset, sale of asset, like that. Here also income receivable and income received in advance. Here also there is no opening balance, there is no closing balance. When coming to the income account, income having which balance, amma? Credit balance. If it is increases, which side? Credit side. If it decreases, which side? Debit side. Okay then guys, see this one. You try to understand. Income received in entry is what ma? Cash or bank account debited to income account. So for that reason in the income account, which side? Credit side. To cash or bank, by cash or bank? By cash or bank. Then after the same logic, income receivable, they will give the previous year and current year. Previous year means opening, current year means close. So receivable means asset or liability? Asset. Asset opening balance. To balance brought down, closing balance, by balance carried on. To means debit, by means credit. Are you getting the point, amma? Okay. Next, coming to the income received in advance. Next, coming to the which one, amma? Income received in advance. So income received in advance, asset or liability? Liability. Previous year is called as opening balance. Current year is called as closing balance. Opening balance. Sir, opening balance of the liability means which side? Credit side. By balance brought down. Closing balance of the liability means which side? Debit side. To balance carried on. Sir, are you getting the point? For that reason only I have explained you about the what is the debit balance, opening balance, what is the debit balance, closing balance, what is the credit balance, opening balance, like that. Okay now. So once again I will tell you, no problem, I will say you. For the debit balance, opening balance will be on the debit side. Closing balance will be on the credit side. Same, increases means debit, decreases means credit. In the same way, opening balances debit, closing balances credit. For the credit balance, opening balance on the credit side, closing balance on the debit side. Same like increases credit, decreases debit. So by way of using this one, you can record 2 means debit, by means credit, and here also by means credit, 2 means debit. So like that we have recorded, and the closing balance will be transferred to which account, amma? P&L account. Here P&L means when coming to the NPO point of view, it is a income and expenditure account. So cash or bank means it is called as receipts and payments account. Are you getting the point, amma? Sir, whether live is getting or not? Okay na guys? The same principles, amma. Same like expenditure account, we have discussed the income. Now we are going to see the concept wise. We are going to see the which wise, amma? Concept wise. What is the meaning of concept, ma? Whether it is related to current year or previous year or next year, we have to see. Sir, income receivable during the previous year means that particular income belongs to which year? Previous year. Sir, income receivable during the previous year means that is related to which year? Previous year. Related to which year, amma? Previous year. Sir, income receivable for the current year means that is related to which year? Current year. Related to which year, amma? Current. That income related to current year. Income received in advance during the previous year means it is related to current year. Income received in advance during the previous year means that particular income related to current year. So this is also a current year, and this is the income received in advance in the current year means it is related to which year? Next year. Sir, now current year means we should record on which side, amma? Increase or decrease or current year and increase. Increases which side? Credit side. Increase means which side, amma? Credit side. So that means these both are related to which year, amma? Current year. So this one here receivable related to previous year, and this one related to next year. This is as per concept. This is what as per concept. Okay na guys? The same account if you draw means we can convert into the NPO point of view also. Sometimes they will give the receipts and payments account amount, we can find out the income and expenditure amount. Sometimes they will give the income and expenditure account, we can find out the receipts and payments. So receipts and payments account is nothing but cash and bank, and P&L account is nothing but income and expenditure account. So totally we have seen all the accounts. So now our time is 7:20. Still we are having the, as per the time, we are having the 40 minutes. Okay, I will discuss the small concept called as provision concept. Okay, na? The provision concept is also very, 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 very important from the examination point of view. At least 2 marks you will get, or if you are having a luck means you will get 5 marks. You get how many marks, amma? 5 marks. So provision for bad debts I am going to discuss now. Which concept I am going to discuss, amma? Provision for concept. Okay guys, no problem. Fine kadanta. So provision for bad debts. Before going to discuss about the provision for bad debts, first of all, we need to know what we need to get, amma? Bad debts. Who said to create the provisions? Who said to create the provisions, amma? Conservatism concept or prudence concept? Sir, prudence concept is not only saying to create the provision. Prudence concept is also saying to value the closing stock at cost or market value, whichever is lower. Whichever is lower. So that point most of the students may don't know. What is the prudence concept is saying, amma? Not only is to create the provisions. Okay, now what we need to do, amma? We need to value the closing stock at cost or market value, whichever is lower. So that is the most important MCQ we may get in the examinations. So what is the bad debts entry, amma? Bad debts account debited to debtor account. So here, why we need to create the provision, sir? If you create the provision, what is the effect on the profit? We can discuss everything. So imagine this is a one P&L account. In the expenses we are having how much, amma? 5,000, and the incomes we are having how much? 10,000. What is the net profit? 5,000. Simple. But we are creating the provision means our profits will be reduces. Battery is wrong. Okay, guys. Sir, what is the meaning of provision, amma? Setting aside of profit is called as a provision. Sir, provision will be created on. Provision is a compulsory, amma. So for that reason, provision is called as a. What happened? Hello. Okay. Sorry, guys. Sorry for the interruption. Sir, what is the meaning of provision means? It is a charge against profit, amma. What is the meaning of charge against profits means? It is compulsory. It is a compulsory. For example, salary. Salary we need to pay. Even though we are getting a profits or not having the profits also, we need to pay to the salary to the employees. Okay, na. So for that reason, salary is called as a charge against profit. So reserve is called as appropriation of profit. Why, sir? Creation of reserve is not a compulsory as per the prudence concept. So as per the prudence concept, creation of సార్ కాల్ వన్స్ మీరే పెడుతున్నారా? ఈ కామెంట్స్ అన్నీ మీయేనా? ఆకాష్ ఓకే డోంట్ డూ లైక్ దట్, ఓకేనా? Okay guys, so we are having the two types of things. First one is called as provision and second one is called as reserve. Provision is a compulsory as per the prudence concept. Reserve is a not compulsory as per the prudence concept. Okay na, for that reason reserve is a appropriation of profit. Okay na, provision is called as a charge against profit. Remember, what is the meaning of charge against profit? It is compulsory. What is the meaning of appropriation profit? It is not compulsion. If you want you can create, otherwise no need. So if you create the provisions, the profits will be decreases. So in order to decrease the profit, which side we need to record? We need to record the expenses, we need to record as income. If you create the provision, the profits will be increases or decreases? Decreases. What is the actual profit here now? 5,000. So in order to reduce the profit, if anything we record on the credit side, for example 1,000 the profit will increases now. Why ma? The total will become how much? 11,000. Here also how much 11,000. If you reduce the 5,000, how much we will get? 6,000. So for that reason we should record on the debit side or credit side? We should record on the debit side, then only the profit will be decreases. What we need to record, sir? To provision by provision? To provision. For example, I am creating 1,000 rupees. I am creating how much 1,000. Now what is the profit will become? 4,000. So what is the entry for the provision creation, sir? Means P&L account debited to provision account. P&L account debited to provision. So we are creating the provision for bad debts, means P&L account debited to provision for bad debts account. This is the entry for creation of provision. Okay, now next, bad debts written off. What is the meaning of written off, sir? Written off means nothing but transfer. Generally bad debt means nominal account or real account? Nominal account. All the nominal accounts will be transferred to which account? Normally transferred to the P&L account. So having the provision means it should be transferred to which account? Provision account. Not having the provision means it should be transferred to which account? P&L account. So if it is transferred to provision account means what is the entry, sir? Provision for bad debts account debited to bad debts account. What is the creation of provision entry? Creation of provision entry. P&L account debited to provision for bad debts account. Provision for bad debts account. Who is this particular person? Akash, I think so. Akash? Okay. Sir, the provisions will show always which balance, amma? Credit balance. Provisions will show always which balance? Credit balance. Because why it is called as credit balance, sir? Means it is a liability. Why, sir, it is a liability? We are creating for the future asset. We are creating for the future liability. For what purpose? We are creating for the future known expenses. Future known expenses. For that reason it is called as a liability. So now for what purpose we are creating the provision? Bad debts. If the provision is a bad debt, bad debt is a loss. Okay now, we are going to set off with which account? Provision account. At that point of time the bad debts loss will be increases or decreases? Decreases. And the provision also will be decreases. We are going to set off with which one? So imagine we are getting a, now how much provision we have created? 1,000. How much provision we have created? 1,000. Imagine we are getting a bad debts of 500. This bad debts loss we need to transfer to P&L account once again. No, we should not transfer. If you transfer to P&L account once again means how much profit it will be reduces to you? 1,500 profit will be reduces. But already you have created the provision for what purpose? Future you may get the loss. What is that loss? Particular loss? Bad debts. So for that reason the bad debts loss we need to set off with the provision. We should not transfer to the P&L account in case of having the provision or not having the provision. Having the provision. So what is the entry, sir? Bad debts loss also decreases, provision also decreases. So what is the entry? Provision decreases means which balance? Provision having credit balance. Decreases means which side? Debit side. And bad debts having which balance? Debit balance. Decreases means which side? Credit side. What is the entry? Bad debts account debited. Provision for bad debts account debited to bad debts account for the return of bad debts having the provision, not having the provision. Having the provision. But not having the provision means where we can transfer? P&L account only. So what is the entry? P&L account debited to bad debts account. Are you getting the point? So here, because of provision, bad debts loss is going to set off. At the time of set off in the bad debts loss, provision will also be decreases. Sir, nothing, sir. In the olden days, in childhood days, what we will do, if you want to buy the purchase of cycle, what we will do, we will maintain one savings, like hundi we can call. In that hundi, we will put what daily 10 rupees or like that. Because one day it will become 2,000, 5,000. What we will do? We will break that particular hundi, and what we will do, we will take the money and we will purchase the cycle. You have got the cycle because of hundi. Here also what we have created for the purpose of bad debts only. Okay, now if the loss is getting means, okay, why you have created that hundi? For the purpose of bad debts. Okay, now you need to set off which thing? Bad debts. If you purchase the cycle means your hundi amount will be there or will not be there. Your hundi amount will not be there. In the same way, the provision account will also be decreases. So and bad debts will also be decreases. So what is the entry? Provision for bad debts account debited to bad debts account. What is the entry for transfer to the P&L account? P&L account debited to bad debts account. So now we need to see the provision for bad debts account. Provision for that. Provision for bad debts is a different concept. Provision for depreciation is a different concept. But this provision for bad debts we can apply for the provision for taxation. We can apply for which thing? Provision for taxation. Sir, provision having which balance? Credit balance. For the credit balance, opening balance will be on which side? Credit side. By balance brought down, this balance will be given in trial balance. This balance will be given in trial balance. And closing balance will be on which side? Credit side. This balance will be given on adjustment. This balance will be given on adjustment. So next one. అరే హిందీ కాదురా, అరే ఆకాష్గా ఇంకొకసారి కనుక నువ్వు మెసేజ్ పెడితే మామూలుగా ఉండదు. ఇదేమో మీ లవర్ స్పాట్ అయిపోయింది ఏంట్రా బాబు. ఓకేనా? సో డోంట్ డూ లైక్ దట్ అమ్మా. ఓకే, గుడ్ ఈవినింగ్. గుడ్ ఈవినింగ్. ప్రుడెన్స్ కాన్సెప్ట్. ఓకే. Udbhav is there. Udbhav, say hi, Amma. Hi. You said the. Okay, I have called the Udbhav. Okay, na? Now stop the messages. Neekundara repu nura chepta. Sir, opening balance will be on which side, Amma? Credit side. And closing balance will be on which side? Debit side. So here, opening balance will be given in trial balance and closing balance will be given in adjustment. Now the bad debts. What is the entry for the transfer of bad debts to the provision? Provision for bad debts account debited to bad debts. So bad debts given in trial balance we will consider. Bad debts given in adjustment also we will consider. This thing will get the balancing figure. What is the provision creation entry, Amma? Provision creation entry. P&L account debited to provision for bad debts. So provision for bad debts account which side? Credit side. So sometimes we will get the P&L balance here also. Either we can get this side or this side. The balance will be transferred to which account? P&L. So we are getting a P&L account debit side means we have created the excess provision. We have created the excess. If we are getting a provision on the credit side means we are created the low provision. We are going to ask the P&L account. Okay, guys. So once again, opening balance on the credit side, closing balance on the debit side, two bad debts. So trial balance or adjustment, and next one, and the closing balance will be transferred to the P&L account. So the closing balance of the P&L provision account will be transferred to which account, Amma? Will be transferred to the balance sheet. In that balance sheet we should not show as a liability. We need to reduce from the debtor. So I will discuss this one with the help of case 1. What is the case 1, sir? They have given the trial balance, Amma. So provision for bad debts is equal to how much? 1 lakh. Given in trial balance means it is called as opening balance or closing balance. Opening balance. So debtor is also given. How much? 5 lakhs. Bad debts given in trial balance. So they ask us to what? Provision for bad debts at the rate of how much? 10% need to be maintained at the end of year end. So this is called as closing balance or opening balance. Closing balance. So at the time of discussing account, adjustment means closing, trial balance means opening. So here also, what is the opening value? 1 lakh. We need to apply this 10% on which amount? On the debtor amount. What is the debtor value? 5 lakh. We can straight away we can apply or we need to reduce the 10,000. We should not reduce the 10,000. Already in the trial balance you are having the 10,000 means what is the meaning of that one? We have recorded the entry, we have not recorded the entry. We have recorded the entry. Which entry we have recorded? Bad debts entry. What is the bad debts entry? Bad debts account debited to debtor account. So debtor credited means already debtor value reduces or not reduces? Reduces. Which entry we have recorded? Bad debts account debited to debtor account. Here the debtor credited means already debtor value decreases. Are you getting the point? Okay na guys? So now straight away 5 lakh into 10% is how much? 5,000. 50,000 ra. 50,000. This is the closing balance. Okay na? So what is the amount of opening 1 lakh. What is the amount of closing? 50,000. Closing how much? 50,000. What is the bad debts available? 10,000. 2 bad debts or 5 bad debts? 2 bad debts. What is the closing balance? 40,000. Here P&L account debit side means in the P&L account which side? Credit side. If you get the P&L account on the credit side means in the P&L account which side? Debit side. This balance what we need to know? Transfer to the balance sheet and we need to reduce from the debtors. We can see the remaining also. P&L account which side? By provision for bad debts, because in the provision for bad debts which account, which side? Debit side. What is the entry? Provision for bad debts account debited to P&L account. Excess provision we are having a low provision. Excess provision we are going to transfer to which side? P&L account credit side. So in the balance sheet debtor value is how much? 5 lakhs. Only 5 lakhs. Already we have reduced the bad debts or not reduced the? Already reduced. So 5 lakhs minus 50,000. 5 lakhs minus 50,000. This is the closing balance we need to reduce from the debtor. And next one, bad debts. In the bad debts account, to debtor account, how much? 10,000. This thing we have transferred to which account? Provision for bad debts account. There is no balance. Sir, whether this account is showing which balance? This particular bad debts account is showing which balance? Debit balance or credit balance? Debit or credit? No balance, nil balance, because both the sides are equal, zero balance we can say. Okay na? This particular account is showing which balance? Credit balance, because credit side is more than the debit side. Super. Now see the second case, important. Okay na? Provision for bad debts amounts to how much? 1 lakh. Okay na? This is called as opening or closing. Opening. Given in trial balance means opening. Debtors amounts 5 lakhs. Bad debts 20,000. But here once again they have given the bad debts in the adjustment. Once again they have given the bad debts in the adjustment. Sir, these bad debts we have recorded in the books of accounts, we have not recorded in the books of accounts. We have not recorded. That means we need to pass the entry. We already passed. We need to pass. Which entry we need to pass? Bad debts account debited to debtor account. Bad debts account debited to debtor account. That means we need to reduce this 30,000 from first debtor. So what is the debtor value? 5 lakhs. From the 5 lakhs, first you need to reduce what? 30,000. How much you are going to get? 4,70,000. On this amount, we need to apply the 10%. How much? Into 10%. That is equal to 47,000. What is the meaning of 47,000? Closing provision or opening provision? Closing provision. What is the opening provision? 1 lakh. What is the closing provision? 47,000. So what are the total bad debts? The bad debts given in trial balance 20,000. The bad debts given in adjustment 30,000. The total bad debts we need to transfer to the provision account. What is the entry? Provision for bad debts account debited to bad debts account. So if you see this one, the calculation, 5 lakhs minus 30,000 into 10%, that is equal to 47. So if you see here they have not given the account, we can prepare the account. So provision for, we can discuss the sums in our book also, no problem. Bad debts. Provision for bad debts. What is the opening balance, amma? By balance brought down. How much is the opening balance? Given in adjustment or trial balance, amma? Given in trial balance. How much amount they have given in the trial balance, amma? 1 lakh. How much amount they have given in the trial balance? 1 lakh. Next, what is the closing balance? To balance carried on. What is the calculation of closing balance? We already done. What is the amount, amma? 47,000. Guys, are you getting it or not? So next one. 2 bad debts or 5 bad debts? 2 bad debts. What is the entry, amma? Provision for bad debts account debited to bad debts account. So next one. 2 bad debts. So what is the total bad debts, amma? In trial balance, how much? 20,000. And in adjustment, how much, amma? 30,000. What is the total? 50,000. Total we need to write only trial balance, amma. Total 20,000 plus 30,000. Do the balance, amma. 3,000. Which side, amma? Debit side. This 3,000 we need to transfer to which account, amma? Profit and loss account, credit side. This 47,000 where we need to transfer? In the balance sheet. Can you say the closing balance of debtors? So what is the debtor value, amma? Initially we are having the 5 lakhs. From that 5 lakhs, first we need to reduce what? Bad debts. Bad debts given in trial balance adjustment. This is the closing balance we need to mention in the balance sheet. Are you getting the point? So these are the main important points. Okay, na? Is there any doubts? Can we see some more questions in our book with related to the provision for bad debts? So we can solve one more question and we can close that one. I will open the book. So can you say the PBD page number? Where is the PBD page number, ma? So in the which chapter we have included? Trial balance, trial balance only, trial balance. So where is the trial balance? In the trial balance chapter, I have incorporated the provision for bad debts question. So 42. I have provided you this PDF also, no problem. Enjoy. Pandagav. 42, So I will discuss see the 6th question, amma, once. So you need to answer all the things related to the provision. A company maintain its provision for bad debts at the rate of how much, amma? 5%. And the provision for discount on debtors at the rate of how much? 2%. Sir, here they have given the 2 provision accounts. Sir, provision for discount on debtors means they are going to provide the, why they are creating, amma? For the discount allowed risk. Provision for bad debts means why they have created? For the bad debts. Provision for discount on debtors means why they have created? For the discount allowed. So bad debts, how much, amma? 800 and 1500. 800 for the previous year and current year is how much, amma? 1500. discount allowed 1200, 500. Sundry debtors before providing all the bad debts and discount. How much amma? 60,042. That means first what we need to do? We need to reduce the bad debts and discount. On the remaining amount we need to charge what ma? Provision for bad debts. After getting the provision for bad debts, what is the remaining amount is there? On that amount, what we need to do? We need to calculate the provision for discount on debtors. Are you getting the point? Okay, I will explain you, no problem, guys. So on 1/1/2021, what is the meaning of 1/1/2021, Amma? So make it as this one as 1/1/2020. Make it as what, ma? 1/1/2020. Provision for bad debts and provision for discount on debtors, opening balances they have given. What are the meaning of this one? Opening balance. So this 2020 opening closing balance will be the next year opening balance. Are you getting the point? So here they have mentioned what ma? Rupees in thousands. So there also you need to mention the rupees in thousands. Sometimes they will give like that also. If do not mention this rupees in thousands, they will remove the marks. Okay na? Okay. The basic observation we need to show. So first of all, straight away I am adding the page here itself. We are in a which year, Amma? 2020 first. We are in a which year? 2020. So they given the opening balances. What are the opening balances of the 2 points? 4,550 is for provision for bad debts and 800 is for provision for discount on debtors. The same concept, amma. Provision means opening balance will be on the credit side, closing balance will be on the debit side. There 2 bad debts. In the place of 2 bad debts, what we need to write? 2 discount allowed. 2 discount allowed. The balance figure will be transferred to which account? P&L account. Okay. So first we are trying to find out the closing balance on 2020. What we can find out, ma? Closing balance on 2020. So calculation of closing balance on 2020 of debtor. So first what we need to remove, ma? What is the opening balance of debtor they have given? Nothing but in the year of 2020, what is the opening balance of debtor? 60,000. So 60,000. From this 60,000, first what we need to reduce, amma? Minus bad debts. How much? Bad debts how much, amma? How much? 800. So 2020 bad debts, amma. 800 and discount is how much? 1200. 800 and minus discount allowed is equal to how much, amma? 1200. How much we are getting? 58,000 is the closing balance of debtor. And next, what we need to find out, amma? Calculation of closing balance of provision for bad debts and provision for discount on debtors. Provision for bad debts and provision for discount on debtors. How we can find out, ma? Easy. We need to apply first what, sir, means from this 58,000 we need to apply first provision for bad debts and then we need to apply the provision for discount on debtors. So closing balance of debtor is equal to how much, amma? 58,000 minus provision for bad debts at the rate of how much, amma? What is the percentage? 5, 5% on 58,000. How much, amma? 2,000. So reduce this one. How much amount we are going to get? 55,100. So and then we need to reduce what, ma? Provision for a discount on debtors at the rate of how much? 2% into 55,100. 1,102. Numbering కూడా సరిగ్గా చెప్పేంటారు నువ్వు. That is not a regular class now. So how much? 53,990. Sir, this, what is the meaning of this 2,900, amma? Closing balance of provision for bad debts. What is the meaning of 1102? Closing balance of provision for discount on debtors. So I will do for 2020. You can do on your own on 2021. It is easy only. So which accounts we need to prepare now? So first we can prepare the provision account. Provision for bad debts account. So can you say the opening balance of provision for bad debts account will be on which side? Credit side. So to a buy, amma, buy balance brought down. They have given in the question, they have not given. They have given. How much, amma? 4,550. For provision for discount on debtors, 800. So what is the amount, amma? 4,000. Just a second, Nash. 4,550. So next we have find out the closing balance, amma. 2 balance carried on. The closing balance we have find out on working note number 2. How much amount we have find outed? 2,900. Just a second, guys. 2,900. And 2 bad debts are 2 discount allowed, amma. 2 bad debts. What is the amount of bad debts we have reduced? Bad debts 800. Bad debts ra 800. So how much we are getting? $850 on debit side to P&L account. What is the total amount, amma? 4,550. Are you getting the point? So in the same way, which account we need to prepare now? Provision for discount on debtors. Sir, next year opening balance will be how much, amma? 2,900 for the provision for bad debts. So provision for discount on debtors account. So what is the opening balance? By balance brought down. How much they have given? 800. Next, 2 balance carried on. We have find out in working note number 2. How much, amma? 1,102. Okay, now 2 discount allowed or 2 bad debts? 2 discount allowed. How much, amma? 1,200. Okay, what is the balance? 1000. This amount we need to transfer to PNL. Can you say the total? 2302. So like this we need to solve. For the next year, what is the opening balance? 1102. Okay na guys, like this we need to do the provision for bad debts. So okay na. So completely we have discussed about the basics. If you want, you can see some another time this video. Okay na. In tomorrow's class, we can meet with the single entry, the most powerful chapter of how many marks? 14 marks. Sir, the today's class will be useful for tomorrow's class. Definitely you will get the benefit only. Okay na guys. So thank you. Have a nice day. I will share my material and I will share the PDF related to the basics also in the below description box. Thank you for your participation, for your encouragement. Sir, without these basics, definitely you will not score the exemption. So many people, what they will do, ma? They will neglect the basics and they will concentrate more on. Okay, I will show you my experience. I will show one of the technique for you, how to get the 80 plus means. Sir, this is the weightage analysis I have given in my material itself. If you see the highest priority chapter, sir, they will give what my accounting standards, partnership, single entry NPO, insurance claims and hire purchase. But for the students, they will not do the practice. What they will do? They will straight away audit. Okay, even though now we are doing the practice, I think so. If I write, you will write. Otherwise, you will not write. Are you getting the point? If you do the practice, then only within a less time we'll get the more marks. Sir, what mainly the students will do means they will do the partnership account and they will do the single entry. 14 for plus 14. How much, Amma? 28 marks. But time you need to see. What you need to see, Amma? Time. How much time it will take to write both the questions of 14 marks? At least, okay, I will ask randomly. Udbo, how much time you will take to complete the partnership account? Udbo will take the 3 hours. Okay, I will take on an average of 45 minutes is the average time. But the students like who are in a backbench students like me, I will take 1 hour partnership and I will take 40 minutes nearly single entry. So how much time? Nearly 1 hour 40 minutes or 1 hour 45 minutes. Nearly 2 hours for 2 questions, Amma. If you want, you can try to attempt in the examination. Try. Okay na? Sacrifice one attempt. Okay na? And then you can realize. Or otherwise, you can listen my words. By way of students' feedback, I am saying, most of the students, they are doing this thing only. You need to attempt these 2 questions after writing all the questions. After writing all the questions means, okay, you are not getting the remaining questions, then you can focus on this. Straight away, if you start with the partnership and NPO, you will end up with getting a negative marks, nothing but 35 marks, 40 marks like that only. So we should not more focus. Okay, we will learn these concepts, but we are not going to write first. Sir, instead of that one, focus on these insurance claims. Focus on hire purchase, leasing. Focus on branch also, ma. Branch also very easy chapter. Within a less time, I will tell you, within a less time, you will score definitely 7 out of 7 marks from the branch. So branch is one of the easiest topic. With the combination of branch, we are getting an insurance claim. This is also one of the most easiest topic. So nearly nearly within 30 minutes, we can write the insurance claims and branch. Okay, na? So next one, you can focus on these chapters like small chapters like consignment, bills of exchange, rectification of errors. If you want to know the rectification of errors, you need to attend my section. So before the rectification of errors, we will discuss what subsidiary books. In that subsidiary books concept, again they were given in the previous paper also. For that reason, I am saying what most of the people, they will neglect this area only. Sir, why you are neglecting this area? You already learned in the foundation. Somewhat extra points only you need to learn. So we are getting how many questions from these concepts, Amma? So second question is coming from this concept, and third question is also coming from this concept only. Why are you leaving? I don't know why they are leaving. So within a less time we can score this area if you concentrate means. Okay na, they are seeing only the big chapters like partnership and single entry means. Okay na, so we will practice, but our main focus on basics and small chapters. So that is only the reason I have started the revision classes. Most of the students are asking, sir, please come with the basics. For that reason only I have discussed the basics. Sir, those are not the basics in my point of view. Without that respect to ledger accounts, we cannot go to the further chapters. Okay. While in my regular classes also, I will start with that ledger accounts only. I will not say the journal, ledger, all the things. And directly after completing of ledger accounts, I will start with the subsidiary books. So it is as similar as my regular classes. In my regular classes, I will teach for 125 marks, 125 hours. But for you, I will teach at least 60 hours from these revision classes. But what is the difference means? I will write each and everything there. Here I will show each and everything, and it will take less time. So as similar as my regular classes. So if you attend these sections, easily we will get the 80 marks. What is the tricks are? Before you are not going to see these areas perfectly. Now you are going to see these areas perfectly with the help of the basics. So that is only my main agenda. So thank you for your participation. Thank you. Have a nice day. Bye bye. We can meet in tomorrow. Thank you. Thank you, lad.